Rahul Arora joining us this morning, CEO Nirmal Bang Institutional Equities. Rahul, very good morning to you. How late were you up looking at what Trump is going to say next? Because I think that's what's become a national obsession now. When is he going to change his mind? What is he going to do next? And how seriously are you taking this 50% number?
Morning, Tamanna. Thank you for having me on the show. I think if we start aligning our sleep cycles with what he's going to say, we'll all end up becoming insomniacs. So I think it's best to just wake up to how the world is reacting and see where we go from there. But of course, I think the world was expecting, India was expecting the tariffs to be hiked. I don't think it's come as a surprise that he has hiked the tariffs because he said that's what he'd do. The quantum of it may have caught a lot of people by surprise, but I think we do have some trade negotiations that are currently underway. And I think, the objective would be somewhere by the middle of September is our assessment to get a resolution on that, because some of those tariffs that he has previously put come into effect today. Some will come into effect about 27 days from now, and the other, of course, like I said, towards the middle to latter half of September. But I think if you couple this with the duties that he had imposed in February and March, obviously it's a bit of a tricky situation. Because this could pretty much, attack your current account deficit. I think, our own estimates are that CAD for the year should be around 0.5, 0.6%. And of course, all that's happening with respect to oil and defense equipment, if we are sort of, having to realign ourselves or purchases from the US and, that trade surplus comes down, then you're probably looking at the CAD expanding to about 0.9% or 1%, which will then have a residual impact on the rupee. But like I said, these probably may be very strong, these may be tactics to strong arm India into a trade deal. And our own sense is that somewhere before the middle of September, some amount of resolution to this effect could be reached. And which is why I don't think in the pre-open you're seeing such an adverse reaction. I think if this had come out of nowhere, the Nifty could easily have been down 300-400 points. But the fact that there is a window for negotiations open for the next 30 to 45 days, and there was an anticipation this would come through, I think the reaction has been far more measured.
Hi, morning, Alex. I'm pretty sure that you've done some amount of crunching of the numbers to look at impact at the granular level. And so from that perspective, obviously some companies are going to get impacted more than others. Are you of the opinion that you should take money out if you're invested currently in some of these names and sit on the sidelines and keep the powder dry if opportunities arise?
No, not really, Alex. I think, fundamentally nothing will change as far as these companies are concerned, because I think the companies that this will impact are either companies that are exporting to the US, which will probably have to, rework some of their arrangements, but they could probably offset that by pricing, and which is with the biggest concern in the United States, that this could probably land up being, a slightly inflationary move for their own consumers. I think if you look at, I just saw something on YouTube a couple of days back where prices in Walmart, for example, for a lot of the tariff-related goods have already gone up by about 5 to 8%. But I think from an import standpoint, whether India is importing from the US or from any other sources, again, it comes down to a pricing power sort of a scenario where even if you're importing at, say, a 4-5% higher price from the United States, do you have that pricing power in India to offset it? So I don't think from an earnings perspective, there will be any major impact. I think the one thing people were obviously watching out very closely is what impact this will have on crude, because, and that's the point I made in my opening remarks on the current account deficit front, that if we are going to now have to purchase some amount of oil from the United States at a higher price than we do from Russia, that will impact the CAD. And obviously, to that extent, there may be a slightly upward revision in our oil bill, but I don't think globally oil prices are going to go up. I think if you look at some of the other top 10 oil producing companies across the world, they're all ramping up production. So I think there is a counterbalancing force that's taking place in the oil market as well. So our own assessment is that oil could potentially stay range bound in this, $65 to $70 range, which would not be too inflationary from a raw material perspective for Indian companies consuming it as well. So I think it's just maybe a short to medium term dip in the market. But there is no reason to overreact from a company's earnings perspective, especially if they have price power, is our assessment.
So as a portfolio thesis, when you are talking to institutional investors, what is it that they are telling you? What is it that you are telling them? Go out and buy some of these domestic focused companies, or wait for dislocations in these global names and buy them at really attractive prices? And are there names within the model portfolio out there?
So, Neeraj, like I said in one of my earlier responses, I don't think our view on a sectoral allocation will change basis this, because at the end of the day, if I'm an OEM and I require parts from some country or a company that I'm already doing business with, I'll have to simply realign myself on pricing. I don't think it's very possible to actually shift your supply source overnight. With that much ease, that's not possible. To that extent, I don't think order books and things like that will be disrupted. Let's not forget that our services exports to the US will counterbalance a lot of the things that will probably happen on the manufacturing side. So to that extent, I think we'll be okay. Obviously, the commentary, Neeraj, that's coming out of the earnings season, especially from the consumer staple companies, is that the rural part of the economy in India is showing signs of revival. Now, whether that is related to the tax incentives that the government announced in the budget, or whether it's the monsoon, or some anticipation that in the Hindi heartland, when we go into elections 3 to 4 months from now, there'll be some dole-outs. But even if you heard Britannia's call yesterday, they are talking about rural having grown in double digits and urban having grown in high single digits. So to that effect, some of that commentary, not exactly in percentage terms, but is resonating across the board from a consumer staples perspective. So when you do have uncertainties globally, I think from a short-term tactical standpoint, it may make sense to enter consumer names. Not that they're going to blow out in terms of earnings, but it's a relatively safer place to hide. The other thing that I said was our services export to the US. I think people have taken a slightly adverse stance towards the IT sector in India. I think after the results and the reset of the prices that has happened, that may also not be such a bad place to hide, because as I was telling Tamanna at the start, if there is some pressure on the CAD and you do have rupee depreciating towards 89.90, that will have a bit of a sentimental boost for the IT companies as well. So I think consumer staples and IT as a result of this could be looked at. We'll have to wait and see the fine print on how pharma is targeted, if at all. But there are a lot of sectors like laptops, electronics that he has left out of this. So I think, if you do get some sort of a sentimental reaction in the EMS players, certainly go in and buy them. I think they have very strong order books, very strong return ratios. So no concerns there. The only thing, Neeraj, is I think they could potentially look at tinkering with the agricultural sector in India, because that is a pain point that has been there in the Indo-US talks for quite some time. So I'm not too sure about how that pans out, but if we are looking at that sector, I'd probably be focused a little more on the agrochemical sector in India than the specialty chemicals and ingredients. So names like, say, Sumitomo, Dixon, on the IT side, since you asked for names, something like a Coforge or a KPIT. If you're looking at consumer staples, there's already been a bit of a run in lever, but something like an ITC or a Tata Consumer, and then consumer discretionary, which we've been discussing for a while now, is a relatively safe place to hide. But like I said, I think the major tinkering, if anything, may probably happen in agricultural, defense, and oil sectors. And in that regard, I don't think any corrections or any news flow needs to be a reason to sell these stocks. If anything, I would say the order books are so strong, you could probably look to buy the dips in some of these names like Hindustan Aeronautics, Mazgaon Docks, so on and so forth.
Oh, so that's an interesting view. Buy the dips on defense. That's coming in very clearly. Thank you so much, Rahul.